This video chart presentation of Rio Mining. It's a New York Stock Exchange listed company trading our ticker RIOM. And you can about throw a dart and hit a miner that's been beaten up lately. But I decided to do this video on Rio because it looks like it's trying to make a double bottom. Now it did slip a little lower this month compared to where it hit in June. I'll come back and define that point in a few moments. But as long as this bottom right here around $1.65 can stay intact, I think this chart's worth keeping an eye on, see if this double bottom plays itself out. Now we are seeing the MACD histogram bars trending back towards zero, telling us a bullish cross is coming of the 12 passing through the 26 EMA. Overall, while that double bottom is being made, the MACD is trending back towards zero. That's an optimistic sign for a trend shift back towards bullishness. Now this is coming off a PPO ADX pinch, which is a nice reversal point, especially when you see the PPO making a higher low. Now we're not getting much from the MFIs. Price per share has fallen well off the highs. Realistically, all you can look for is there, turn in the MFIs, get pointing north, try and get back through 50, show people are paying higher prices for the stock. Even with the price per share falling off, I think it's notable that the accumulation distribution is making some higher lows. Again, it's optimistic to see if there's just not massive selling in the play. There is still some accumulation going on. You can also read that from the Chaikin money flow right there at zero. Essentially means that buying and selling pressure is equal over the last 20 periods. CCI, right now I'm just looking for that sort of thing. Keep making higher lows. Show that the current price is moving more towards its 20-day mean. Full still trying to come out of oversold territory. Again, not much bullish momentum in the play. That should be expected with the way the price per share has dropped off. And the tricks, like the MACD, just looking for a higher low, overall channel upward. It's not even really bullish until it breaks back above zero, but early on signs, like to see it flatten out and drop a bullish cross. Relative strength index, working its way out of oversold, still in bear chart territory below 50, but showing some early on signs of a little bit of momentum building as the stock price sits on a base. Now you can see, back in June, stock price hit $1.68. That's right where the stock opened on Tuesday. As I mentioned, it did dip below, it went to $1.66, but it pulled back up and even closed at $1.75 for gains up around 2% for the day. Volume actually picked up a little bit, even though it was still only 160,000 shares traded. It's a pretty thinly traded stock. You can see on a massive day, it only trades a little over 1 million shares. So with that in mind, these thinly traded plays can move very quickly on low volumes. Now in intraday trading, I certainly would like to see that stock price hold that $1.65, $1.66. But as far as closing prices, I'd like to see it hold over top of $1.68, hold this double bottom, because what I see for resistance has a pretty nice upside for a little bit coming in right here around $2.05 to what I'd call some initial resistance. And I don't really see it getting stronger until up around $2.35. That's where I'd see the first primary resistance, with additional coming in up around $2.90 in these old highs. But that point right there around $2.35 is going to be a tough spot. Price per share has to break through the 50-day moving average for that to happen. It was a little bit of an area of resistance back here in July, and the stock had a difficult time with that point again in September. But from current closing prices, that's about a 35% upside, and that's the type of thing that I always look for is a stock on support, so that gives an easy exit if that support's broken, minimizes any loss potential, and a nice little upside to resistance, which could potentially be signaling an overall reversal of the chart and a true bottom. Now again, this is a mining play. It's no big secret with the tough time gold prices are having, and miners in general, but based purely on technical analysis, this is a chart to keep an eye on going forward to see how it performs. As always, merely my interpretation of the RIOM chart. Thank you for watching. Trade smart.